In this video, traders, we're going to look at a pin bar trading strategy. Stay tuned. Hey guys, warm welcome to you. Right, so I'm going to give you a quick trading strategy using pin bars, the pin bar trading strategy. Pin bars are super powerful. The beauty of these is if you can draw support and resistance lines on, if you can recognize a pin bar, which we'll go through in a moment, you can trade this strategy. You're a day trader, you're a swing trader, you're a forex trader, you're an index trader, spread betting CFDs, this works. It's a good strategy. And the beauty of this is you can restrict or relax the rules as you see fit. If you want more signals, you relax the rules a little bit. You get more signals, profitability might go down, but you get more action if that's your thing. If you want to restrict them into the very, very best sweet spot, then you get fewer signals, but over time you should have statistically probability, the more chance of a win per trade. So the pin bar is this, guys. If you look at the kind of candlesticks here, we've got an inside day here. This is a pin bar, this is a pin bar, this is a doji. These are the two pin bars that we've got from these. Now, people say, they argue about the width of this and the length of this and whether it should be green or whether it should be red, doesn't matter. Okay, all that matters is this, that imagine it's a daily candle. In the day, the market has gone to low. Imagine this one here, the market has gone to a low, but inside that day, people change their mind and the supply demand has shifted back up. And so you have this scenario where that's the open, market's pushed lower, been rejected, pushed higher and closed at highs. It didn't have to be necessarily high, you can have a little small wick to the upside there. But the key element here, guys, is that you've got a small body, you've got a big tail. Small body, big wick. You know, in other words, an intraday movement that hasn't stayed there and has pushed back. That's what we're looking for. We're not interested so much in the percentages and stuff, just eyeball the thing. If it's a little bit wider, fine. If it's too wide, it's not a pin bar. You get the idea, you know what you're looking for, and over time you'll start to improve what you're looking for. So let's get to the strategy. Bang. First thing is draw on your major only support and resistance lines. Not minor ones, not little piddly ones that have just started to, form, you've had one touch of. No. We want major lines. That's going to be stuff like, you can see from this chart, guys, this type of thing here. This here is a major line. This here is a major line. This here, nah, that's a minor, pathetic. We don't want it. We want major lines only. If you know how to draw support and resistance, you can trade this strategy. Number two, create a time-based rules for the trade. What on earth does that mean? Well, this is kind of restriction that I like to add. Not many other people do this, but it works for me. If you're trading a market, you're trading USD JPY, for example, you trade Euro USD, you trade DAX, trading FTSE, you trade gold, trading crude oil, there are going to be times in that market where it is more active and there's more volume. If you're trading the index, it's going to be when the stock exchange is open. If you're trading the currency pair, it's normally when one of those currencies is open as well, the stock exchange is open, because that's when people are awake in that country. That's when money is flowing in that country. Trading gold, US session, European session, a little bit of Asia session. You get the idea. So you have restrictions, and then you can restrict even more, and you go, right, I'm only going to take a pin bar on the Dow, for example, during the Dow stock exchange open hours. That's the restrictions I'm looking for. And if you want to go one further, you go and trade it at the open or the close if you want to go that advanced. Don't need to, but just restrict yourself. What you don't want to be doing is taking pin bars on the Dow at 2 o'clock in the morning, because yes, whilst brokers are still offering that, whilst the currencies are still trading, whilst GBP USD is still operating 24/5, at 2 o'clock in the morning UK time, Americans are not available to trade, or they're not open to trade and they're not around. Most of the Brits are asleep. You've got a few Asians who are trading it, but it's not the most liquid time. So just restrict the times that you want to trade this. Number three is decide on the risk per trade. I've kind of gone off piste a little bit here, but I can never do strategy rules without some risk. Just decide on the risk per trade. Simple. $100, $1,000, $5,000, $50, $10. Whatever level you're operating at, doesn't matter. Just decide on how much you're going to risk per trade, and then you can work back your position size from that. Fourth thing, we're on 4, here we are. Fourth thing is look at the longer term trend in a line. I think this is a secret hack, guys. I hate the word using secret, reverse it. I think this is a little bit of a hack. And I would say secret because it's not a secret, but it's something that just helps give you edge. It's free edge. Why not use it? What does this mean? So if the longer term trend is up, then just look for buys only. There's enough markets out there and things out there that You don't have to try and be clever and look for shorts and uptrend. Yes, trends end at some point, but why not make life easier for yourself? If the daily trend is up and you're on a 5-minute chart, just trade longs. Don't bother trading the shorts. I kind of rant about this sometimes. You guys give me some grief for it. I appreciate that, thank you. But I think it's easier. I think it's easier to align yourself with a longer term trend. Don't have to, but I think it's easier. So what we do is we kind of look for these pin bars to occur at our support and resistance levels. So we've got our major levels here. What we're trying to find is the market going up to the level, putting the pin bar in through the level, and then reversing. So for example, if this was our pin bar, we would have this here as our support level. Market comes down to our support level, puts the pin bar in, and then we go long on the close here, and we put our stop loss under here, if you want to do that. Now there are ways to adjust that. You can use 50% of the move, you can use just under that level here, you can have a stop here, you can have a stop here. You can play around with it. I'm not going to give you kind of exact rules for that. You decide on the conditions yourself. Very, very broad stop is to have it under that low. Tight aggressive stop will be to have it here. But the importance of the trigger and the entry is you'll do it at the support level. Same with this type of trade. If you're trading at a resistance level, that's got to be a major resistance. Yeah, it can be here, but the point is the pin bar has to be through that major resistance, has to have come back up to the resistance level, put the pin bar in and trade it like that. That's exactly how we should be looking. You know, it should have rejected the level, because why this works is that we have the intraday change in sentiment, the actual pin bar, we have the rejection of the level, the actual key level that you've drilled down and you've drawn yourself. Those combined, and if we want to be extra clever and add a bit of edge with the trend, mean that we've got a high probability that the next couple of candles are going to be in our direction, allowing us to take some of the trade off, scales out some of the trade, take some money off the table, look to scale, look to trail, look to trim and trail the position. And guys, that's the pin bar trading strategy, or the outline of the trading strategy. There's more to it, you can add more to it, you can make it more advanced, you do what you need to do with it, but simple process. Draw your support and resistance, look for your pin bars, have your time constraints, align yourself with the trend, know how much you're going to risk, and keep an eye out for it in your markets. Take care, and if you like this video, thumbs up is much appreciated, and I'll see you in the next one. Bye bye.